So if both the risk-on trade and the safety trades are moving in the same direction, what does that tell us about the state of the market that we're in, Guy?
It's a great question, Melissa Lee, and I will attempt to answer it. I don't think it's. I think it actually is telling the real story. I think the S&P 500 is telling one story, but you look and I'll add a couple other things. At one point today, the VIX traded almost 19 on what was a pretty benign day. You mentioned Bitcoin underperforming. Maybe part of that is Jerome Powell walking back a December cut, but this was in process long before he started talking. You mentioned the staples as well. I mean, there's something clearly going on, and I think the volatility index is sniffing it out. I also think this weakness in the bond market, I want to be careful here, is something that's going to sort of permeate over the next couple of weeks. So despite the fact that those 7 to 10 names we talk about are doing very well, market breadth and other things suggest something otherwise.
Yeah, market breadth has been miserable. If you're a Mag 7 ETF or a Mag 7 player, life's good. And today was that kind of a day. And as been pointed out, I mean, the equal-weighted S&P is down 6.5% since September 1st. Meanwhile, semiconductors have outperformed the S&P by 22% since September 1st. So it just tells you, I mean, a Micron, which is doubled. It just gives you some sense of what's going on here. Obviously, we're going to talk about this other headline today, which is Amazon OpenAI, yet another one. But I think the dollar creeping above 100 on the dollar index is another one of these things. It's not that the dollar, which often can be seen, a dollar rally is a risk-off moment. It's a combination of a lot of things. I think the weak dollar trade is something that a lot of people were expecting. I think there's a dynamic that people believe is important for the stock market. And so, yeah, I mean, there's a lot of anecdotal evidence in a world where we apparently don't have real government data anymore that certain parts of the economy, listen to the shippers, listen to a lot of different parts of the economy. Rails over the last couple of weeks have given us actually a lot of data points in terms of what is the most economically sensitive, arguably part of the economy, at least to impact stocks. So I would just jump in and say, I think after a heroic run in equities, it's not surprised to run into some heaviness. I still think this is the best month of the year. I still think we're going to be higher than where we are today by Thanksgiving. Gobble, gobble, Guy. And I think it's a case where you can't overthink this. The Fed's out there. Different members of the Fed are saying we're now more focused on inflation than the jobs market. And so there's not this green light for straightforward Fed and everything else, even though, again, the most exciting trade in the world is game on.
So I think if you wanted to buy the market off this dip, you would have to have a green light by the Fed. So I think that's the number one thing.
To cut again.
To cut again. Number two, Guy said it's been going on for quite some time, the weakness of Bitcoin. Meme stocks, quantum stocks, those have been bought. Those are the risk ones. Those are the non-profitable companies. And then Jerome Powell last week takes December off the table. That means rates are going higher. Or the market's saying that rates are going higher. So what goes lower? Staples. It's competitive. Higher rates, they underperform. What doesn't perform well with higher rates is Bitcoin, too. So there's a double reason why Bitcoin doesn't perform well. There were choices a month ago with quantum. Now they have higher rates to look forward to.
Yeah, just say on the earnings front, the dollar that Tim just mentioned, it's kind of doing this rounding bottom. It's back up to that $100 level. And then if you think about rates, if they're not definitely priced to go much lower from a U.S. multinational standpoint, there's some pressure there as far as earnings have been a tailwind. And on the crypto thing, I mean, listen, Bitcoin was moving higher when rates were higher, and I think this is one of those ones where you want to kind of say there's certain relationships that make some sense. This thing has defied a lot of relationships. And I think what's going on right now is that over the last couple of years, we had this move. We had the ETFs that were being listed. Then we had deregulation. And then we had these treasury strategies. Well, it doesn't seem like there's too many other companies now signing up for these treasury strategies. And if you think about it, MicroStrategy was first to it. I think they own 640,000 Bitcoins. I mean, 3% of all the available Bitcoins. That might work out great for Michael Saylor and Strategy. It might not work out that well for all these other companies. He just owns Bitcoin. The other ones are basically replacing stuff on their balance sheet with Bitcoin. It might end up not doing the thing that they hoped it to do. And then if we ever have a reason for this to unwind a bit, it's going to be quite nasty. And then if you think about, you just mentioned all those companies that have gone public who are these trading companies or brokerage firms or whatever. I mean, if you don't have stable coins, if you don't have a healthy stablecoin market, then those companies I don't know why they exist, right? We already have places in which to trade them. If you look at Robinhood, how much that they trade these things, why do you need a company just designated to be there to trade crypto? Like, that's my personal view. I mean, I have a Robinhood account or a Fidelity account. I can trade it all right there, right? And I can have my 401k there. I don't think that's the thing that those other exchanges are there to do. They're there to kind of do stable coins. And to me, it seems like a solution in search of a problem.
And then when you see technicals on Bitcoin, every time you trade down $5,000 dollars worth, you see this de-levering come in or risk adjustment come in. To Dan's point, the higher Bitcoin goes, the higher those Robinhood coin stocks will go. But if once you take the steam out of it, that unravels to a lot of tentacles in that whole space dramatically quickly.